Hi guys, welcome again to Fitrit Sane. I know all of you want to be healthy, wealthy, and wise. I am Aditya, and I bring to you people who are as passionate about the topics that we love as we are. You can listen to them, and if you're listening to this live, you can ask them questions right here. To find out about the next live episode in advance, you can follow me on Twitter and at Telegram at Fitrit Sane. We will simplify processes for you, bringing them down to small, actionable steps that you can take today. For today's episode, we are lucky to have with us Suyog Dhavan, whose blog Strategic Alpha has been awarded as one of the top 40 blogs in India on investing and trading. Till date, Suyog has mentored over 350 people. He is a full time investor and entrepreneur. In fact, he is a serial entrepreneur. I will share the link of his story with you, and you will be amazed by the variety and the number of businesses he has successfully done. He worked with NJ India for a year and a half, and as we know, today's topic is about finding and riding multibaggers. Suyog is particularly passionate about finding multibaggers, and as I said, more importantly, staying invested in them till required for these picks to play out as multibaggers. He has been investing for 13 years and mentoring investors for 5 years now. By the end of this session, Suyog will teach us how we can identify multibaggers and if we should place a stop loss once we identify a multibagger. His company, Strategic Alpha, is today valued at 20 crore. That said, thank you everyone for joining in and for supporting me in all my ventures. Without further ado, let's learn from the various experiences, mistakes, and successes that Suyog has had. Coming over to the man of the hour, Suyog, in your own words, what is your story? How did you get attracted towards the stock market and especially into finding multibaggers?
So, thank you for the warm introduction. So, see, I started my stock investing journey at the age 16, and I got interested in stock market because of I thought it is the fastest way of making money, and it was my brother who was in MBA during that time when I was 16. He opened his first demat account when he was aged 18, and that is when I started dabbling in stock market. I am using the word dabbling. The reason for that is the first stock which I bought was JP Associate, which is down 99% since then. So that is how I started, because I thought stock market में बहुत बड़ा पैसा बहुत जल्दी बन सकता है. That is how I attracted, and my brother is because of whom I started my stock investing and stock trading journey. In fact, it was all gambling at that point of time, but it was because of my father. That is when I got interested to learn more about the business, because my father was a businessman, and I saw my father's success, doing from around one lorry turnover in 1995 to around 70 to 80 lorries until 2013-14. So that is what inspired me to look into businesses, and my father had multiple businesses. He inspired me to enter and try out a lot of businesses, because of which I got interested towards business side of investing from stock market perspective.
So thank you for being so real with us. Most people just want to brag about their multi-baggers and how their first picks turned into 100x. So thank you so much for starting with a real example. That's how most of us start, and maybe that will help us relate with you more. So now, as you mentioned that your father was one of your inspirations. So we'll come to the multi-baggers part in a while, but talking about finances, how do you think your father molded your way towards this journey? And according to you, how should parents encourage their children to live a lifestyle of financial freedom?
So one thing which I have seen in my father, since my very early age, he never discouraged me to do and try something. So at first, so you can imagine, at the age of 11, he gave me an opportunity to handle the godown operations at first. So that is when I started my means somewhat I was not understanding many things, but with subordinates and all, I started my business journey from that year itself, 11th, 12th. 13th was the year when I started my first business, when I made 3,000 rupees during Diwali time. That was a seasonal business. So that is how. So for my father never ever discouraged me to do something, but at some point of time he was not happy with my stock market way. And in fact, if you go through my story also, there was some time when I in fact went insolvent in stock markets. So a lot of people see my success story, but it is very hard to stay there and do that. So I was insolvent, and during that time also uh, he took a very good decision of not supporting me at that point of time. He said that this is the mess created by you, and you have to clear this mess yourself. And it was very tough, and but he was always supportive in other sense emotionally, but he never helped me from the money front. That is what helped me out, because if he had helped me during that time, I would have never came out of that to learn the hard lessons of life, hard lessons of stock market. So from that perspective, I see him as my big inspiration, because the way he has molded me to try test a lot of things. Otherwise I would have never tried many things in my life, and I would have been the same person like many people are living their life, running behind running in the life as a rat race. That would have been the story for me.
So, as most of our community members who have been together for a long time now, they can tell you the most stress that I have put is on actions, is on doing. Knowledge is available everywhere, but then the many experiences in businesses and in life you had at an early age have probably put you where you are today. And I strongly believe that it is a world of doers and not just of thinkers. Your falls and rises are really inspirational. And honestly, so is the tough parenting that was given by your father. I think very few Indian parents are able to do that. Most Indian parents would jump to just help their kids in any way possible. And I think your father also helped you, just not in a financial way, but in a better way than that.
Yes.
But since it's not a parenting podcast, maybe we'll discuss that some other day. Just, I mean, I'm personally inspired. I would like to know a little more about your early businesses that you did before you got full time into the financial sector.
Yeah. So I entered the stock market at the age 16. But before, as I said, I did my first business at the age 13. I did my second business at the age 19, when see, my father business was into scrap material, foundry raw material trading. So what I saw from my from my father's business, one thing which I saw was finding value in discarded things. So my father's job was that, and because of that, I got more inspired towards finding value in discarded things. And in the same thought, I started I visited. I saw one raw material which is used as a raw material for auto components, and I was looking at that raw material, and I found out some manufacturing plants which were manufacturing that, and the waste out of that, whatever the waste used to come out of that, I started thinking that can we convert this waste into a original raw material which they produce, and that was ferrosilicon. So for that matter, I spent time in Bhutan, I spent time in Pondicherry. So and ultimately, after 2 years of trying and all, I got success, and I was able to convert that into a pure material, and I used to supply that to Rajkot. That is one place. It was my father's connect only, but this was a different segment in the whole business which he was doing. So it was some innovation from my end, and that inspiration came from my father's business itself, finding value in discarded things. And if you see my journey, I've been writing blogs from 2015, and on my YouTube channel also, you'll see me buying one of the hated stocks in stock market, and you'll see that finding value in discarded things, the same theme there. So father in some way has influenced my way of thinking of finding multibagger, because if you want to find a multibagger, अच्छा समय और अच्छा time, अच्छा भाव कभी साथ में नहीं आते. So if you want to find a multi-bagger, you need to buy good businesses during bad periods. That is when you get a great amount of discount. That is when the world will be hating. If you buy the same things which the whole world is liking, you're at a risky place. You won't be able to make big money at a lower risk. So ultimately, this business has helped me to understand that when you buy discarded things, where world is discarding that, but you are seeing value. When I'm saying that buy discarded thing or buy one of the hated stock, it doesn't mean that go and buy JP Associates and all. That is all kachara and penny stocks. It is something like which you are able to see and the whole world is not able to see. If you are able to find that, it can be a treasure trove for you. And the same thing happened with me in that business, because at the age 19 I made 28 lakh rupee profit during that time. So 19 ka hi continuity tha in 2021 when I visited Bhutan for my same venture, but the extension part of that. I visited Bhutan. In fact, I have purchased materials from the companies from the King of Bhutan. So I was fortunate to meet the King of Bhutan and all those things. So all these experiences, especially for my father at that tender age of 21, he left me alone to go there in Bhutan, explore. I lived there in Pondicherry for 1.5 years. That is what has helped me well in this investing journey of stock markets.
All I can say is that doers are the winners. I think there's no doubt that you are here in this position today in a good financial and social position and in other areas of your life because you have been a doer from a very young age. And guys, I hope you're also taking parenting notes along with the financial notes. One small note for everybody. I see a few people raising their hands. As always, we'll take questions at the end of the session. So please write down your questions, note them down, and we'll take them at the end. Suyog, I loved how you said कि अच्छा समय और अच्छा भाव साथ में नहीं आते, and you have to look not for the dust but the diamonds in the dust. But coming to the $1 million question, how do you think we find these value picks, or you can call them techno value picks or turnaround stocks, and how do we find these diamonds in the dust that eventually can turn into multi-baggers?
So first thing is that if you want to be a investor, value investor, or if you want to ride a multi-bagger journey, first thing what you need to do is exit all stock market discussion groups. Exit all means this is what I have done myself. So what happens is whenever a discussion happens on any stock, it is already late. So if you want to make money and want to make multi-bagger money, you should be on a lonely path. Because lonely path can create you multi-bagger returns. When Rakesh Jhunjhunwala bought Titan in 2002, he was very among few people who knew Titan, and he bought it. It was one of the hated stocks. Stock was down 70% from the top. So from a mindset point of view, think that if somebody is talking about that stock, which means that you are already late in that journey. If you go and think, if you go and look at the charts where the stock discussions are already happening and a lot of people are talking about that, it has all, you will see that the stock has already turned 2-bagger, 3-bagger, or a 10-bagger. So first thing first, from a mindset perspective, you need to be on a lonely path of investment journey. This is एक बार mindset बना लिया, उसके बाद it becomes easier to accept few things. So this is what I wanted to say it first. Second thing is there are 6,000 plus stocks listed on Indian stock exchanges. How to find those 5 to 10 great ideas? So it is a long process. I'll cut that short and help you understand. So first thing first, at the first stage filtration, which I call it, we need to create a universe of ideas first. From 6,000 stocks, we need to at least come down to 250 stocks or 300 stocks. So how we can do that? There is a special video which is available on my YouTube channel. You can go through that later. But in short, I'll be sharing that. So there are multiple forums like Value Picker Forum. There is website called as Value Picker. There is website called as Multiple. There you can attend multiple networking events. Like one is happening right now there in Goa on 17th, Investor Accelerator Summit, where you can A lot of people are exchanging their ideas. So that is how you can filter out the ideas. Second, look for the companies where you have worked into, the industry where you have worked into. That can become a source of idea. uh, there might be some YouTube channels which you might be following, so which resonates more to your thought process, so that can also be a source of your idea generation. The other idea generation sources can be like Twitter post, if you are following someone on Twitter. So which here important thing is following those who resonates your thought process much. So that is much important. So when I'm saying that you should be on a lonely path, it should not be like that कि वो आप अकेले ही हो आप उस जर्नी में. It becomes very hard for the value unlocking. आपके जैसे thought process, connecting with like-minded people. So this is how you can generate a lot of investment ideas. And we are talking about a crude investment idea generation here, where we come from 7,000 stocks to at least 200 250 stocks, which resonates to you well. So based on that, you can create a list of these stocks. Now the second stage of idea generation, once you come out of that, second stage is you need to filter out from those one of the hated stocks of stock market. When I'm saying one of the hated stock, it doesn't mean that you go and buy negative book value company, you go and buy like the shares like which have become kachara. We have to stay away from the bhangar cap companies that we can understand. If you go and buy JP Associate, JP Power, you are not going to make big money. So what we need to do is find out those stocks where in past 10 years business तो अच्छा चल रहा है, but 5 साल 10 साल उसका return नहीं बना है. One of the examples can be like Hero MotoCorp. Hero MotoCorp, nothing should be considered as a advice here. Please take it for the educational purpose. And I've made a special video on the Hero MotoCorp that is available on YouTube. But I'll just tell you about that. How do I think when I'm looking for multi-baggers? So पिछले 10 साल में, in past 10 years, stock has not moved anywhere. So this is a clear sign that you will understand that this is one of the hated stocks in stock market. That is the same thing which happened with ITC. I posted about ITC some 1.5 years back that it can become a multi-bagger from here on. There are various tools to find out the exact time, but I'm just telling you the thought process because we are short of time here to tell you all the tools and all. But I'll be covering it in my workshop also. I'll be talking about that later stage. But in this, what we need to do is we need to find out one of the hated stocks. The business has done not bad, but the stock price has been languishing. So from this, what you will be able to do is from 250 stocks, you will be also at least getting 30 to 40, 50 stocks from those lists where the stock price has not moved anywhere. Because this is the first thing you need to look at when you are looking for a multi-bagger. You should be on a lonely journey and the whole world is hating. And that is what happened with ITC. Just 2 years before, if you look at the total chunk which retail shareholders owned, it was a very big chunk. But when it actually started moving, the retailers sold off their shares, institutional loaded up the shares, and the stock became a multi-bagger.
It had become famous as a joke stock, as a meme
Yes.
stock.
So that was the time to look at that because बहुत सारे लोग hate कर रहे थे, and that was the maximum amount of safety. The downside risk is one of the hated stocks is very high, and a lot of people talk about multi-baggers, but the key to making money is not finding the stock which can become a 10x. Is at first you must look at the stocks which will not erode your capital. Because at first if you protect your capital, तभी तो आपका पैसा बाद में बन सकता है. So the first and foremost, if you want to protect your capital, you need to buy a stock which has not moved well. So if you go through my case study on Hero MotoCorp, you'll be able to resonate what I'm saying. So the video is available on YouTube.
That's a ton of knowledge right there, Suyog. I mean, I think right from 6,000 stocks that are listed in the Indian market, you have brought us down to at max, I think 1% of them, maybe even 0.5%.
50, 60 stocks.
So
now we have come to 50, 60 stocks.
So if in 2 steps we can come from 6,000 to 60, I think that's a huge step. And I think the people who were with me in the previous podcast can relate. We discussed one thing on a very different note, but then, universes collide. That we discussed that to be right, you have to be right first.
Yes.
And that is when the world will be calling you mad, but that is how you make the maximum money.
Yes.
And believe me, Suyog, at this point, we weren't even talking about stocks at all.
Yes.
We were talking about businesses and life in general. And we came up with this thought that you have to be right first when the world thinks you're mad. And that's how you reach the maximum level of success in life in any field. That said, I loved how you said that you should primarily first look into companies and sectors where maybe you have worked or you have some kind of expertise in.
I call it as circle of competence.
Absolutely, absolutely. That are within your circle of competence where you understand actually what is happening. And of course, the most important thing is never lose money. And let me be ruthless, slightly ruthless, maybe slightly rude, and say one thing here. If any of us thought that finding multibaggers will be so easy that will give you a link, or anybody in the world can give you a link with some screeners, and that will give you the list of multibaggers where you can invest and become a millionaire, that is obviously impossible. Otherwise, you would have done it, I would have done it, and probably we wouldn't be sitting here. We would have been just investing every penny into those stocks and becoming millionaires. So that's not how this works. Always remember in life that huge money and huge success will come with hard work. That goes unsaid. As they say, you can take the horse to the well, but you cannot make it drink water. So we'll share the exact steps with you. We have already come down to 60 stocks from 6,000. And I'll just repeat the two steps that Suyog shared in my own words. First is that you look for stocks from people. So I'll tell you something, Suyog. Many people keep asking me that if they want to learn trading or investing, which course they should buy. And I just tell them one thing. See, there is no single course that will help everybody. It cannot be mine, it cannot be yours, it cannot be anybody else's. I'm sure many people would remember this answer. I told them that they should follow every possible Telegram channel, every possible YouTube channel, follow every possible Twitter handle. And then over a period of few weeks, few months, you start realizing which ones of them resonate with you, as you said. And you will realize that barely 1 out of 100 will actually resonate with you. You will understand what they are saying and you will feel like actually following them. So that is where you get your first idea where you should think of buying a course or where you should look for the first round of stocks from. Now, when you are done with that, uh, there is a very common saying that in the world there are four categories of stocks: large, mid, small, and penny. In India, the four categories are large, mid, small, and bhangar cap or kuda cap. That can be completely ignored. So, from the list that you got from the first step, that is from the people whom you resonated with on social media or in your personal circle, you look for stocks, as Suyog said. I'm just repeating his point. You look for businesses that have been doing well over the years, but the return from the stock has not been very good. That is where the value is still locked and it will probably be unlocked at some point. You can look for increasing profit. The profit should be increasing, the cash flow should be good, the debt should be low. Those are various factors that you can look at. But if the stock has not given good returns, you can look more at it, and there's a good chance that it will eventually turn into what you would like a call a multi-bagger. But the biggest problem, Siyog, as I have told you before, so Siyog and I had a lovely conversation for 1 hour before this session. And as I told you, Suyog, the biggest problem that I feel is not finding the stocks. 2 years back, there were people on Twitter who were making jokes about ITC, and there were people who were advocating ITC. But as you said, the moment the stock started increasing in price, retailers exited because they were happy with the 10% rise. They were happy with the 10% profit. Now, if we keep booking this 10%, how do we ever get to the 10x?
So the answer lies in the filtration process itself. So after you come down to 60, 70 stocks, so second step filtration means third step filtration, in fact, will be circle of competence filter. So if you are some business in some businesses where you don't understand, you will always be fearful. You will be always be looking at that business as a stock. To make money from stock, you should look at stock as a business, and you'll be always confident about the stocks where the sectors where you have worked into. So for me, the circle of competence is like I worked into metal trading with my father. So that becomes my circle of competence. 2025 stocks comes in my metal circle of competence. I've worked as a trader myself. So trading business is like the businesses like DMart, Shankara Building Products, MedPlus Health Services, the products where you buy low and sell high. So trading is a very good business. So trading becomes my circle of competence. I was a student of MBA environment. I used to visit sugar manufacturing companies for my study during those 6 months. So sugar becomes my circle of competence. I've worked into JSW Steel for 6 months as an intern. So metal becomes my circle of competence. I've worked as a mutual fund distributor. So I understand what it takes to run a profitable mutual fund business. AMCs becomes my circle of competence. There are around 20 stocks. So after this filtration process, you'll get to around 30, 40, means from, let us say from 250, you come down to 100 first. From 100, you come down to 50, 40, 50. So after that, there should be a filter, second filter, that should be promoter check filter. So even though whether I should say here or not, but it is okay to share my opinion. So I don't like Navin Zindal much as compared to Sajjan Zindal. So JSPL is out of my filtration process, and it is not hard in this today's world to know about a person, because in this today's world everything is digital. If you go and search any person, and if you just search the keywords like fraud, if you search the keywords like litigation, if you search the keywords like whatever these types of keywords, if you just search on Google, you'll get some or the other thing. Then there will be management interviews which will be on YouTube. Through their body language, you will be able to understand whether it is very hard to say at first when you start doing this activity,
That will obviously
but
come with
with practice and experience, you will be able to see. And right now at the stage where I'm in, just by looking at the video, I'm able to differentiate whether he is
Wow.
saying the truth or not.
Wow.
So it is all about connecting the dots. We have to be Sherlock Holmes, and it becomes by experience. And investing is such a business which you can do till the last day of your life. So you, even if it takes 3 to 4 years of your life to learn all these skills, it is worth. Because all other businesses, if you do, you have to put in capital, you have to put in HR, you have to put in marketing. But this is such a blessed business, as also Vijay Kedia also says, this is a God's gifted business. And for this God gifted business, if you are not able to spend like 3-4 years to learn this business, you should not be there in stock market. So this is how you can do the promoter check filter. Then there is valuation filter. So all this filtration process, you'll get to a high conviction idea which the stock resonates with you. I'm repeating the word resonate. The reason for that is, see, you'll be able to ride the entire journey of a multi-bagger if your lifestyle or your thought process or the way you are, the persona, because every stock carries a persona. That stock's persona should match your persona. And if this do things match, you will be able to ride that stock for a longer period of time. I will share one small story. It is Shankara Building Products. I bought it at 250. Before COVID, it went to 600, around 500. I never sold it. In COVID, it came down to 100 rupees, 96 rupees. I never sold it. Still, I'm holding it. Today, it is at 750. So if I keep on, see, if you can see here, even after doubling, I never sold it, and I'm never in regret, even if it fell down to 100 rupees. I was able to do that well. The reason for that was I was able to resonate with the business idea. I was able to resonate with the whole idea, which it can become for the past 10 years, 20 years. So there are very few businesses where I do this. So Shankara was such business. So to be able to resonate with this, you need to follow this process. That is how that is. I'll tell you other tricks also, but this is what I wanted to share with you.
So somebody had once given me an example for sticking to stocks. Like you are attached to your house. With your house, it's an emotional attachment, but with the stocks, you need resonation attachment and conviction attachment. You need to be really convinced about the business. Now, every morning do you go to the market and ask कि मेरा घर कितने का बिकेगा? I'm sure you don't. So just like that, it's not always just about the price. It's also about the value that you're getting from the house or the value that the business is providing to the world. And as long as the business is providing that value, it will be profitable. And if it is profitable, it is guaranteed to give you a good return from the stock also. I'll give you one more example. Unfortunately, I don't remember the names right now, but then we keep looking for micro cap stocks to invest in, thinking that they will go 100x. What we forget is that there are micro cap investors in India who are doing really well, but I'll tell you why they are doing well. They physically visit factories of these stocks in remote corners of the countries, talk to the management, talk to the labor, spend days and days traveling in trains and rickety buses. If you think you have that conviction and time and the inclination to go for it, that is when you start looking at microcap. As Suyog said, you have to look at your circle of competence. It is not just about the sector. I think, if I'm not wrong, Suyog, the circle of competence can also be about the large cap or the capitalization of the stock. You
Yeah, that
don't
can be also.
Right, you don't have to attend every party. Never try to attend every party. If you try to attend every party from every sector and every market cap, you can rest assured that there is no chance that you are going to make any returns more than the index. And I feel, as I have said many times before, that I agree that this goes contrary to the spirit of this session. If you think you don't have the time or the inclination to spend a lot of time with stocks, stick to the index, stick to mutual funds. Your returns will definitely not be as much as you can get from stocks, but it depends on what you want and what you like. Coming to the most important thing that Suyog has shared, the step 3. I'll just repeat the first 2 steps, which were looking for stocks from people that resonate with you. The second step was looking for stocks among this universe that have a good business but not have not given a good return. Now the third step that comes in is the promoter check.
Circle of competence.
Okay,
Third
sorry.
is circle of
Okay,
competence.
so the third check
And
is
fourth
circle
is
of
promoter check.
competence. Whether you understand the stock, whether you will be able to understand the stock more than anybody who can do a Google search. And then comes the fourth step, that is the promoter check, where a wonderful idea given by Suyog is that you can Google the name of the promoter along with words like fraud and litigation and other keywords, so that you find out if the management is honest. We keep saying that the management needs to be honest and progressive for a company and subsequently the stock to do well. And I'm sure that any course or degree that you have done, be it a BA or a BBA or a CA course or whatever, it would have taken at the very least 3 years. So please don't expect to learn stock investing or stock trading in 1 hour. It will take months, but as Suyog said, it will 100% be worth it, because you can do it all the time. You can do it from your place. You can do it till your last day. You don't need any kind of manpower. You don't need any kind of investment that can go to zero easily. So, uh, but as we have discussed, Yog, finding the multibagger is one thing, but it's easy to uh, back out from the stock the moment it gives a 20% loss or a 20% return. In both cases, it's very, very easy to have your conviction shaken and to move out. What are the other behavioral biases that we have to take care of?
See, there are two approaches to investing. First is, one approach is like which I am personally like, one approach to investing is like, I don't care what prices does as long as the business is doing well. So that kind of approach I invest in decades. So that portfolio is different for me. So where I'm not least worried. So those portfolios are my daughter portfolio. So I have gifted my IDFC First Bank share in COVID at around 18 rupees to my daughter. Shankara Building Products, which I talked, 250 rupees during COVID time. So such stocks, Wonderla Holidays last to last year, 221 rupees. So such stocks are the stocks. Every stock is either a 3-year story, 2-year story, 1-year story, or a 10-20-year story. If we are able to differentiate between these ideas, what type of idea is, it will be helpful for you to create portfolios with different mindsets. So the mindset we here, which I talked about, these three stocks, Shankara Building Products, Wonderla, and these, there my mindset, I wanted to invest it for decades. I don't wanted to look it for the price itself, because वो तो it's in my daughter's demat account, and she cannot sell it unless she turns 18. So ultimately I'm never carried away. It is very easy to say that कि मैं 100 के बाद मेरे भी portfolio में था, but it is very difficult to hold on to those. I agree to that. So this will help you create portfolios with different objectives. This way you will be able to ride it the entire journey. Second portfolio is where you want alpha over the index, because if you see the history of past 40 years, you'll be able to see that index has given compounded 14 to 15% return for the past 30-40 years. If the index has given 14% return, if you are able to generate alpha of over and about 10% on the index, that is 25% CAGR. So what it will make is you'll be able to double the capital every 3 years. So with that, 10 lakh can be converted into 100 crores in 20 years. So this is a simple formula. If you are able to do that for every 3 years, now here approach should be very different than what I told earlier. So in this approach, what you need to do is you need to look at the doublers and create a portfolio of 15 to 20 stocks. And here you'll be worried if the stock comes down 25% from the recent top. So here you need to apply some technicals, find out along with the fundamentals, you need to apply the technicals, you need to apply the value investing. Here you want to perform in anyhow and double your portfolio in 3 years. Here the complete aspect is very different. Here you will see that if the stock is underperforming, you'll replace it with the stock which has a potential outperformance, or with the outperformance. This you can simply follow like averaging up the winners here in the second approach. So what you do is, if you are creating a portfolio of let us say 15 to 20 stocks, you'll be all buying a stock. This is what I do in this aspect of the portfolio, where I buy 5% of each stock, 20 stocks, but I average only those stocks where the numbers have came good quarter on quarter and prices have moved up the multiple resistance zones. So I keep on averaging up the winner and I don't average on the downside. Automatically what happens is, चलते हुए घोड़े पे आप ज्यादा पैसा लगा रहे हो. So you need not to be worried about the losers here, because you are not adding more there. And in some cases, if you need to reallocate some part of that, because sometimes what happens is stock can go down 30-40% and still it will turn multi-bagger later on. So you never exit a stock just because other stock is performing. You can reduce it. So that way what you will ensure is, you will ensure that you're always in the winning game, and it will help you ride the multi-baggers better. And this approach helps better in this second level of approach which I said, where I'm creating portfolios for, let us say, 3 years and 5 years or 7 years. So investing should be goal specific. It automatically eases out all the problems of riding a multi-bagger.
That's perfect, Suyog. We have also discussed many times that investing should always be goal based. Till the time if you don't know if your goal is 2 years away or 10 years away, and also if it is discretionary or non-discretionary,
Yes.
You will invest, even if the goal is 15 years away, you will invest differently for your child's education
Yes.
and differently for a world trip. So till the time these two things are not clear, the timeline and the discretion part, it will be very difficult for you to understand what kind of investment you have to do. So
you must know where you have to reach.
Where you have to reach, exactly. Otherwise, which direction you will take. If you have to go to Bombay from Delhi today, you have to know that you want to go to Bombay and not to Chennai. That's how you will choose the first turn. So, Suyog, that also teaches us something very important about which stocks we should average our position more and which stocks we should reduce our position. And I will just repeat that and correct me if I'm wrong here, Suyog. I think you said that and I agree with that we should increase our position in stocks that are the winning horses, which are our winning horses, and also which are technically breaking every further resistance that they are facing.
I'm much more happier to add a stock at 52-week high than at 52-week low. 99% of the people do opposite. and that is why only 1% people are super successful.
That is the biggest problem with stock investing. और कितना गिरेगा?
बराबर.
और कितना गिरेगा, कितना भी गिर सकता है.
And in fact, if you see the story of Rakesh Jhunjhunwala, a lot of people are talking his story about his success in Titan. But when he bought it first in 2002, he never knew that Titan was going to become such a big multi-bagger. He kept on adding on the winning horse, and that is how his expectations were much lower. In fact, it was not his original idea. It was his I don't recollect his name. The one who is handling his wife's portfolio now after his death, Mr. Uppal Seth. So it was Utpal Seth's idea, and because of whom he got more convinced and he kept on adding it. So it was not his original idea. So it is very difficult for a common man, and he's also a common man as like us.
Right.
So we need to add up on the winners wherever it is possible. But to have that, you need to have that vision to see.
I'm sure many people are thinking right now that the example you gave of the, correct me if I'm wrong again, 20 lakh turning into 100 crore by the 25% CAGR. Many people are thinking that that is not possible on a regular basis. But then as they say, you always aim for the moon so that even if you miss, you land among the stars. So I'm sure even if you're not able to achieve that 100 crore and you're stuck at 50 crore, you wouldn't feel bad about it.
It should not be hard written rule that 100 crore hi banana hai. But at least aspire for that.
Exactly. 100 crore ko aspire for 25%, and you'll definitely end up somewhere near that.
Yes.
So Suyog, that is, I think, what the strategy you said, it can be called the concentric circle strategy, where one circle is purely for decadal investing, where you don't look at it for decades and decades. Now, the other part where you think you might add more, or you might exit, or you might reduce the position, once you have picked the stock and you are sure that you want to, you are sure that it can turn into multi-bagger, do you think we should still place some kind of a stop loss, or should it be a dynamic stop loss?
So what I do is usually in deep value zones. So if you want to find a stock which can become a multi-bagger, you need to find a deep value zone. There is and how do we find a deep value zone? You buy one of the hated stock, you ultimately will find something which is in deep value. There is a separate long session on it, where I explain about deep value. But in short, I'll say that in deep value zone, I never place a price-based stop loss. It is all thesis and in value-based stop loss. If the thesis is going wrong, I'll exit the position completely. But in deep value zone, I never take high, long or concentrated bet. It is my, like as I said, 20 stocks अगर ले रहा हूँ, 3 to 4% का मेरा पहला bet deep value zone में पहले लूंगा. उसके बाद जब वो स्टॉक मूव करता है डीप वैल्यू जोन के बाहर, when it crosses the 52 week high, तो जब मैं एडिशनल क्वांटिटी जो ऐड कर रहा हूँ उसको मैं स्टॉप लॉस लगाऊंगा. मगर मैं जो डीप वैल्यू में लिया है, आई विल नेवर प्लेस अ प्राइस बेस्ड स्टॉप लॉस फॉर द stock which I have bought basis value, basis the business. So it is the subsequent quantity addition which you do can be placed as stop loss, because that is how you can manage your capital efficiently. But in deep value zone, never place a price based stop loss, because what happens is in deep value zone, even if the business is going through a rough patch, the stock will tend to bounce back. You must have seen that many stock bounces back again and again. Most probably the stock will be in deep value zone. If the stock is going down, bounces back once again. So that is what happens. So you need to, when you find a stock in deep value zone, automatically you completely stay away from permanent capital loss. Temporary loss is okay for me. If I bought a stock at 100 rupees, stock going down to 60 rupees even is not a worry for me, because my 100 rupee ka 100 rupee I have not put it into that. I have put 5 rupees into that, and if 5 rupees become 3 rupees, it is not a worry for me. So in deep value zone, I never place a price based stop loss, and I never average on the downside, however the great business is, because there are times where you say that you are smarter than the market. That is when it is a deep value zone. What you are saying, it is one of the hated stock, so you are going against the market actually, right. And you are saying that I am smarter than the market, but you are putting small amount. तो मैं शाना हूं, but मेरे से ज्यादा लोग शाने हो सकते हैं, तो मैं कम पैसा लगाऊंगा. So I'll put small amount of money. But there are times where you will say that market is smarter than you. So when you will say that, when you are averaging on the upside, so because you are going with the flow, when you are going with the flow, it is like you are saying that the market is right than me. So at first you said that you are smarter than the market, you allocated some. When you average up, you said that the markets are smarter than you, kept on averaging, and you, because you have said that market is smarter than you'll use market rules, that is stop loss. So this helps, hope this helps you to understand.
So what I understood from this was that for stocks that you have bought in deep value, the stop loss, if anything, is
Fundamental and thesis basis.
fundamental and thesis basis. And the other risk mitigation is diversification, where you invest a small part of your capital in it.
Yes.
And for running horses, for your winning horses, you can create a technical stop loss like the market actually expects you to do.
Yes.
Now, Suyog, I think we have had a long discussion. Just one or two more questions that I have is that we have discussed investing so far, but then there are many people who want to create a regular income from the stock market. So, like we have discussed deep value and value investing, is there something also called value trading? What would you recommend to people who have recently come into the market and want to create income from trading?
So we have a separate process for that. That is completely different than the value investing process. So in value investing, that is actually techno value investing, what I say, which we discussed earlier. So buying in deep value and averaging on the upside. Now there is second part, which is value trading. So which I do. So this is what I do in value trading. So there might be some businesses which are not a part of your core portfolio. So what is value investing? Whatever we discussed about all about core portfolio, that is investing. Now there might be some businesses which you are observing from long time, but the business are not in your circle of competence, but because of your observation you are thinking that the price move might happen, and you have obvious reasons for that, like I call it as PEAD, price post earnings announcement drift. So there was stock like Marks and Pharma. So pharma is not in my circle of competence, so it will never be a part of my core portfolio. But Marks and Pharma, when I was observing it for long times, 5 years I was observing it, that stock, whenever it crossed 70 rupees, multiple time resistance, plus there was a earning blast. So quarter on quarter profit jumped 100%. So it was in deep value, but because it was not in my circle of competence, I never made it a part of my core portfolio. I bought it for trading when the earning blast happened. So the same deep value stock which was available at 30, if it was in my circle of competence, I would have bought at 30 rupees itself. But I bought it at 75 rupees when the stock moved out of the deep value zone and entered into a momentum zone or a GARP zone, growth at reasonable price. That is when I started playing it with technical stop loss. So that part of my portfolio where such stocks might be in your observation, I keep 25% of my capital for value trading, which becomes a momentum play for you. So the same logic can be applied here, but you don't buy here in deep value. You buy it at a later stage when market recognize that deep value and starts buying it. So that approach helps well, because value trading, if you apply it with earning blast, the risk rewards can be as high as 1:5 to 1:10. So when you are losing 1 rupee. When you are gaining 5 to 10 rupees. And stock market is a probability game. You need to be 5 times out of 10 times. Still you will be able to make money through value trading. So there is a special session. I'll talk about that at a later stage.
So that is very correct, Suyog. Stock market, at the end of the day, whether trading or investing or anything else, is always a probability game. Never forget that. You can do all your research, but ultimately you have to diversify and you have to mitigate your risk to make sure that you, as we discussed earlier, you do not lose your capital. What I learned about value trading, the most important thing for most new retailers, I think, is that, as Suyog said, we should do it once we are more comfortable with the market.
Yes.
Once we understand the market, that is when we'll automatically start seeing stocks where the value is reasonable and there is a constant earnings growth or there is an earnings
I'm
sudden
talking
blast.
about earning blast.
Earning blast, right?
The momentum comes in the stocks where there is earning blast. I've
Right.
created a screener for that. I'll be sharing that link at the end of the session also.
Right. So one final question, Suyog. Most fundamental investors keep talking about the necessity of reading annual reports, but then the annual reports of companies are so long that most people find it very hard to go through them, and it's also very difficult to understand them. So I understand this is beyond the scope of a single podcast to teach somebody how to learn to read annual reports. But what is a good place to start learning about it?
So annual report is the most important thing, but I'll give you a short trick for that. If you think that you feel bored by reading annual report, there is a smart way of doing it. So annual report, just first let us talk about annual report. I read around 150 annual reports on an annual basis. So that has become my
Wow.
daily routine now for the past 10 years. So at first it was very boring for the first 2 years. Now it has become like fun. I complete one annual report in 10 to 15 minutes. I come to know that within 3 minutes I come to know whether should I go to read this annual report or not. So it with practice it becomes very fast for you, and that is why I can read such so many annual reports. So annual reports may the most important thing which you need to understand if you are starting your investing journey. If you no matter whether you understand or don't understand, these points we need to read this most. First is management discussion and analysis. There you will be able to see. Before that you need to read about industry outlook. The management will be talking about the industry outlook. Then you will be able to you should read management discussion and analysis. Just complete these two parts on a regular basis if you are a fresher. Automatically, if you once you get a hold on to that, maybe 3 months or 6 months, then you come down to financial numbers, balance sheet, profit and loss statement, and other things, notes and all those things. And the simple shortcut for this is, because annual report is 1 year old, you don't have access to the latest data. The simple shortcut to that is reading the con call reports, because con call comes every quarter. And in annual report you can manipulate the things and you can just simply write through your content writer.
Right.
But in con call there is a live con call where the investors are asking questions that will give you a lot of insights to the industry, that will give you a lot of insight to the business. So con call में आप झूठ पकड़ सकते हो, annual report में झूठ नहीं पकड़ सकते. So start listening, but I feel listening too boring. I prefer reading. There are con call recordings available on the website called as Trendylin, which you can go through that. But transcript का भी आज shorter version भी आया है. If you go on website on screener, there is con call transcript notes. That is for a person who has already read, who has practiced reading con call reports. For them it is better. But for start, you should start reading con call reports.
So if you are reading 150 annual reports every year, that's almost like one report every 2 or 3 days, and that's the hard work, guys, that is needed to actually find multibaggers.
Now that 150 number is exaggerated. The reason for that is it takes 15 minutes now. Earlier it used to take a lot of time.
That's the thing. Your overnight success has come after 20 years of practice, and that's how it always works.
Yes.
So as Suyog said, I'll just recap. To start reading the annual report, you start with the industry outlook and then the management discussion and analysis. And Suyog, my last question for today would be, as I've told you earlier, we are a community of doers. We like taking action. Knowledge at the end of the day, if it's not actionable, it will not give us any kind of result. So if we want to pick stocks today, what is the one small step that we can take uh, today before sleeping to reduce the universe of stocks?
So the first and foremost is you can go through the video. Is how to find investment ideas. That is one activity which the community members can do. Second, I am taking a live workshop on 27th of August. I take this workshop on a regular basis once in a month. So this is absolutely free for all the Fit Rich Sane community members. And it will be a 3-hour workshop wherein whatever we have discussed today in short, I'll be elaborating that in a 3-hour long workshop. And after that, there is 2.5 hour will be a long workshop, and half hour I keep it for question and answers. So 27th August is the date. I'll share that link with you.
Yeah.
And you can share it later on.
So thank you so much for that, Suyog. I will also like to tell all of you that Suyog has shared links of his video where he explains how to find multibaggers, along with a few ready-made screeners from stock screeners from screener.in that will help you shortlist, as we discussed, the universe of stocks available in India. But please don't take that as a direct recommendation to invest. First of all, every screener will give you so many stocks that you cannot blindly invest in all of them. And secondly, and at this point, I will repeat the 4 steps that we have learned today to find multibaggers. The first step, as we have discussed earlier, is look for stocks from people on social media and from your social circle that resonate with you. The stock should resonate with you, as well as the person sharing it should resonate with you. Only then will you start believing slightly in the stock. Secondly, look for stocks that have not given very good returns in the last few years, but the business has done amazingly well. Thirdly, check if this business is in your circle of competence. See, anybody can easily tell you that you can invest in a TCS or an HDFC and you will get some kind of return, or you can invest in a mutual cap or in the index and you will get some kind of return. But to differentiate yourself from the crowd, you need to find your own circle of competence, and that is what will give you the edge. And the fourth step is the promoter check, where you Google the name of the promoter along with various keywords and you see if they are doing well. And finally, after that, depending on whether you want to invest from a decadal point of view or for a shorter term point of view, you check the valuation of the stock. And we also discussed how we can put a stop loss in different kinds of stocks depending on our outlook and depending on whether we want to hold them for a very long time or whether they are relatively shorter term trading bets. So that said, thank you so very much, Suyog, for teaching us this process and this funnel today. I'm sure it must have taken you many years to come up with it, and we got to learn it in 1 hour, and that is the beauty of our platforms. And right after this live session, I will share all the links with you. The link of the video where Suyog teaches us this process, the links of the screeners, as well as the link of the workshop that Suyog will have on 27th, and which he has regularly, even if you miss it on that day. Uh, of course, follow Fitrich Sane on Twitter and Telegram for many such enlightening conversations, and of course, for daily actionable tips. I will also share Suyog's Telegram and Twitter handles with you shortly. And thank you so much for being with us. Stay in touch. And with that, I open the floor to questions. If anybody has a question, please raise your hand and I will give you permission to speak.
One ending note I would like to add. One thing is for sure. So if you want to be in a business, and it is a lonely business, if you want to be in a business of wealth creation, first and foremost, more than the intelligence, you need to have that stomach to make money. कुछ भी होगा, market के हर time में correction आएगा, all those things will happen, but you need to have that stomach to make money. Then and then only you should fall into finding multibaggers. Otherwise, it is not a business for you. This business, you should have that stomach. Intelligence नहीं होगा तो भी चलेगा. If you look at Vijay Kedia, you'll be able to understand. There are a lot of people who have created big wealth who are not even learned a lot of things. So here इंटेलिजेंस से ज्यादा पैसा बनाने की बुक चाहिए.
जिन लोगों ने मेरी बुक पढ़ी है, माय बुक योर प्रूवन जर्नी टू वेल्थ, योर सिंपल एंड प्रूवन जर्नी टू वेल्थ, so they will know. Suyog, there is a chapter in it which starts with a story of how this very intelligent person earned a lot of money but ended up bankrupt, and this person from a very mediocre background just kept investing, and eventually donated a few $1 million to her alma mater. So yes, those stories do exist in this field, and this is the only field where such stories exist, where purely by your behavior you can outperform and outshine people who are more talented, more knowledgeable, and more intelligent. Right?
you have to learn losing first.
Correct.
Losing, when I'm saying losing, because in stock market, most of the people don't accept their mistake. That is where they lose a lot of money. So in real world, why smart people are so much successful, the reason for that is they know how to win. Here
Right.
you need to understand how not to lose. You must be understanding the how losing also, and how not to lose that.
Right.
So that is the first step of making money in stock markets.
As
And that is what in 80% of this today's discussion, what we have discussed is all about not losing.
as is the one of the most famous quotes by Warren Buffett, that the rule number one is never rule or never lose your money, and rule number two is never forget rule number one.
Yes.
So that's what Suyog has found from his own experiences also, and that is what honestly I have also found, that as long as you're not losing money, as long as you make sure that your capital does not get eroded, you will make money at the end of the day. That is the most important part: risk mitigation and risk planning.